I am being asked quite a bit in the last couple months, a great question by my customers and people I'm working with who are looking to buy a house. And the question is this: I don't like the interest rate. The interest rates are too high. What happens if I spend a little extra each month on my principal payment? It might be $10 extra a month. It might be $50, $100, whatever they can afford. What happens? What's the benefit to me? How do I calculate the benefit of me spending a little extra money on my mortgage each month? And that's a great question. And I love it. Why? Number one is when you spend extra on your mortgage, you're paying yourself, you're not paying a lender. Obviously, you're saving money on interest cost, but think about it. If you put an extra $100 in a month into your house, that $100 in your house that you own now is appreciating at market rate. That's pretty significant because you want your home appreciating as fast as it can, and you want to own as much of your home as you can so to appreciate better at market appreciation levels. So it's a really good idea. So the idea is, well, how do I calculate it? So I actually put a model together, and my model does a couple really neat things. So if you have an existing mortgage and you want to add some additional principal to it, it'll calculate the benefit of that. But the model will also calculate, let's say you're looking at buying a home, what the impact of paying discounts or points are. Is that a good idea? The model will figure out, well, maybe you don't want to pay points, you'd rather have a credit. You'd rather take a little higher interest rate and have the lender pay you a credit. Is that a good idea? Or should you just go with kind of a par rate? And so I put a model together that basically will calculate that information for you, and the inputs are really easy. This is just the summary page. So there's another input page behind it, but the summary page, so if you're looking at a new mortgage and you're deciding, hey, do I want to buy down the interest rate on the loan and pay a discount, or par is even money, or if I maybe want to take a little higher rate and get a credit, what's the impact of those decisions over 3, 5, 7, and 10 years? This is a great tool to model that out for you. And then the input page, which is this one right here, this is how simple it is. You don't have to be a math wizard to do it. I built the model. Just anything in yellow, you can put that information in, and the model will turn back to you what the summary is, or the results of additional payments or paying points, things of that nature. And really, it's pretty simple. So if you want to calculate right in this area what the net benefit of additional principal payments are, all you have to do is just input in that yellow box what the additional payment is, and it'll calculate it throughout the entire term of the loan. So you'll know exactly what the benefit each month is through all the payments in your loan when you pay additional principal and balance. I hope that makes sense to you. It's a great tool. It's really simple. I am happy to share it with you. Just call me, 720-419-3016. I'll show you how to use it. I'll do the math for you. You can take it, I can send it to you. You can do all the math you want on it to your heart's content. I'm more than happy to help. If you want to find me, #EfficientLending is a great way to do it. I'm on X quite a bit, at Mike_lending. But love text 720-419. I'm more than happy to go through this model with you so you can do your calculations and figure out what's best for your scenario. Thanks for checking out my content. I appreciate it. Love to hear from you. Have a great 2025.